Liquidity is designed to trap you. But if you wait for confirmation, then definitely you'll make so much money from the markets. Now let's dive into the charts. So I break down some of these traps you need to avoid. Now today we're going to be talking about how to avoid liquidity traps on gold. Now I've explained to you guys what is liquidity. I've explained to you guys liquidity traps. Now how do we avoid those traps on gold? Because I notice most people in the world today, everybody's trading gold. Do you understand? Now let's dive into the charts. Now, if you look at this gold 4-hour time frame, you can clearly see that this market is what? This market is bullish. Now, if you're looking at spotting some of this liquidity, remember the diagram I gave you guys from the previous video, right? Before the sale would continue. Now, where can you spot this? You can easily spot it here. All right, that is number one. Now, number two, you can also say this is what? This is a wedge pattern, which signifies what? It signifies a continuation. Meaning we might not be getting that push back to go clear this high before we see that dump. But does that change anything? No. So what I will do in this video, I will head back to the daily, weekly, break down everything back, then scale down to smaller time frames so you understand everything I'm talking about. Remember, I don't offer investments. My mentorship is currently closed until next year, February. So from now on, take advantage of my classes and also take advantage of the free signals and educational content I share in my Telegram channel. Now let's move to the daily time frame. Okay? Or let's move to the weekly. It's been a while we've done this. Let's move to the weekly time frame. Now, what can you see from the weekly time frame? Judging by what I taught you guys so far, from the last three candles. From the last three candles, you can easily tell this is the first candle, this is the second candle, and this is the third candle. Now, allow this candle speak to you. Allow this candle tell you where the market is headed so that you don't just trade blindly. Now, number one, look at this. What does this candle shows you? It shows you that there's a pressure at the bottom. Now, this pressure you're seeing at the bottom, I've explained it before. Let's use a rocket, for example. Now, when you light a rocket, there's an ignition at the bottom. That fire is what? Is this wick. So whenever you see a massive wick at the bottom of a candle, you should be well aware that that wick is what's going to continue pushing the candle to the upside. Or that wick is indirectly telling you that there are buyers under the market pushing the market. Why? If you see the wick at the top, it is indirectly telling you that what? There are sellers pushing the market to the bottom. Do you understand? Good. Now, we can already tell that this is what is happening here. How about this? This is actually what? This is actually, most people call them doji. Do you understand? Most people call them doji. But what does it mean? It is indirectly telling you that both buyers and sellers are pushing pressure. Now, sellers are selling from the top. Buyers are what? Buying from the bottom. So the market meet at what? Meets at equilibrium. That is exactly what you're seeing here. So this is indirectly telling us that, okay, the market pushed to the upside, seller pushed it back down, then sellers tried pushing the market one more time, but buyers entered. Now, sellers tried to push it again, buyers entered. Do you understand? Now, see how this candle is closing. See how this other candle is closing now, the new weekly candle, because when you're using the three candle formation for direction and to get a proper directional bias, you only pay attention to 1, 2, 3. This is not involved. Now, see what this other candle is looking like. It is indirectly telling you that what? The buyers sitting at this point are what? Very, very aggressive. Because if this market should break below here, this is what we're going to see. The next push will be to this level. But since the buyers here are very aggressive, that is why the market is still holding that level. Now, if you look at this zone here, all this place, the buyers were exhausted. That is why I say if the market break here, we're going to see a push to the downside. So indirectly, what are we looking out for? We're looking for what? We're looking for gold to come back here, then we buy back or see if the market will break below here. Now, that's the technical analysis. Now, how about fundamental analysis? Now, fundamentally, US has actually been going forward, strengthening some of their relationship. This is a recent one that he just did with North Korea's president. Then recently, him and China also settled. Do you understand? But if you look at what's going on, there's no panic, there's no fear. Aside from USA saying they will come into Nigeria, they are not saying it's concerning any other country. Do you understand? So there's no panic, there's no fear, there's no reason to buy gold. Always remember, gold is a security. Gold allows investors to run towards it in terms of fear to save money. Don't forget. Now let's move to the daily time frame. Now on our daily time frame, what can we see? We can already see that, judging by our key level, we can see that this is what? This is a resistance. Why? Because the market tested here 3 times. 1, 2, 3. Remember, before a support and resistance will be valid, the market must test it how many times? 3. Come back here. What can you see here again? This is a support. How many times did the market test it? 1, 2, 3. Now, don't forget this line. This is our weekly key level. We drew it from the weekly. Now, let's scale down to 4 hour. Now, moving to 4 hour time frame. Now, on our 4 hour time frame, remember why I taught you guys the concept of liquidity? If you've not watched the video, please go and watch the video. I told you guys that liquidity can be found at the top or bottom of what? Of an exhaustion or consolidation with what? With wicks. What is that wicks telling you? It is telling you that people that are selling here, their SL is here. People that are selling here, their SL is here. These other sellers, their SL is here. So automatically the top here is filled with what? Orders. Now, people that are buying, where's their SL? Here also. Do you understand? Good. Now, let's go back here. Good. Now, look at these charts. With the amount of wicks we can spot here, there are liquidities what? Resting here. Okay? And if you look at the bottom also, there are what? There are also liquidities resting here. So what do you want to do as a trader? You want to wait for this market, right? If you're selling this market, I promise you can still sell this market. But if you're selling this market, you sell it back here, you buy back. You sell it back here, you buy back. But always remember, if you're looking to hold your buy long or your sell long, you need to wait for this market to what? To break below here. Once this market breaks below here, it has taken out all this liquidity. Do you understand? Then if we see a retracement back into here, then you can buy. To go what? To go clear this next liquidity resting here. Do you understand? Pay attention to what I'm saying. But if the market should break above here first, that means clearing this liquidity first, right? What would you do? You automatically take a huge sell to the downside. Because why? The liquidity at the top has been cleared. Now, since the market is actually what? Since the market is actually bearish, because you can see the double top here, then we can confidently sell this market to the downside. This is what I'm actually talking about indirectly. Push, gives us a liquidity, drops, consolidation, go up, clear, then drop. Do you understand? That is indirectly what? Indirectly what I'm drawing. This is exactly what I just drew here. Do you understand? So this is how you spot liquidity on gold. Now let's move to the 4-hour time frame. 1-hour time frame. Now if you come on your 1-hour time frame, what can you see here? On your 1-hour time frame, you can already see that this market here is exhausted, very, very exhausted. Now, how would you know a market is exhausted? You will notice the candles start getting smaller. The candles are no longer momentum candles. They are getting smaller, smaller, and smaller. What do you do in situations like that? Please, don't be in a rush to sell these markets. This is a trap. Except you see a huge dump. Because that huge dump would close the buyers here. That is when you can still sell down to here, then buy back. Do you understand? But until the market breaks here, that these buyers are resting, you need to what? You need to be very, very careful. Do you understand? Until the market breaks here, you need to be very, very careful. That means we could either see one more push before what? To clear that liquidity before we start looking for a push to the downside. Now you can see how the weekly time frame helped us with direction. The daily gave us key levels to pay attention to. The 4 hour showed us 2 key liquidity levels that need to be cleared if you want to hold your buy for long or you want to hold yourself for short. Now we also used fundamental analysis to understand that fundamentally there's no reason to buy gold at the moment because we just started the month of November. Do you understand? But if any panic should arise later on, then definitely the market will spike up to go clear that liquidity before what? Before we continue dumping to the downside. Now, with all this that you've learned so far, know where liquidities are resting on gold, know how to spot these liquidities, and become a profitable trader. I remain Uko Anthony Uche, also known as Tony Sniper. Peace.